Hey traders, TG Watkins here. It is July 7th when I'm recording this, so it's Thursday afternoon, and let's kind of get into it. So yesterday when I left off with you guys, I was talking about how back in the day, copper was the metal with a PhD, and nowadays there's kind of been some talk that maybe since the world is very technologically advanced and we have electronics and just about everything has a chip or a semiconductor or something like that in it, that maybe semis are a better measure nowadays of kind of our economic growth and economic situation and consumption and all that kind of stuff. And so maybe that is the new something with a PhD. So I wanted to talk a little bit about that. So if we go over to SMH and show you guys the kind of what's going on here. And what we can see here, we got the weekly, the daily, and the hourly. And we know that even though today we had a big, yesterday, today had up moves, that basically we have been looking at the semis being just terrible. I mean, really, really having a hard time. And so what I wanted to follow up on is that even though the market might start moving up, which I think it looks like it's trying to do, and that semis might also move up, if the semiconductors continue to kind of lag the market, I think what that could be is just a heads up that even though we get a rally in the market, or the S&P, makes some fairly good highs, or makes, 20%, 15%, something like that on the way up, that we're still in a tough economic situation, right? We're going into a recession. The Atlanta Fed has come out and they're basically keep hovering around an estimate of like -2 for GDP. And so we know that we're going into a recession. We also know that the effects of interest rate hikes and all this other stuff that governments and American governments are doing is really putting on the brakes. And we're seeing a whole bunch of just economic data out there saying that things are contracting, and they're contracting pretty hard. So even if the S&P starts to make some pretty new highs, just watch for the semis to continue to be weak. Yeah, of course, they'll bounce. They can rally too, but they will probably be lagging the market, and just keep watching that. And then on the flip side, whenever the market does straighten things out and get better, watch to see if the semis kind of help lead the way, and what that does as far as our condition of our economy. So if we come over here, if we look at the S&P, let me get over here specifically. There you go. There is the daily chart and the hourly chart, and then the 15-minute chart. So we had FOMC minutes yesterday basically confirming that the Fed is pretty hawkish. So just a heads up on that. And then you guys kind of know my 50-250 maneuver. So 50-250 maneuver. Well, pattern within a pattern, it can happen again. I'm kind of looking at this 50-250, and I want to see if something like that happens. Part of the reason why I'm looking at that is because, we have the jobs number tomorrow, Friday. So by the time you guys see this, we'll kind of have that answer, and we'll see where I end up on that. But I look at this and I say, we've been rallying for a few days now at this point, pretty nicely, very nice sharp move, basically from a crunch down on Tuesday. And then we've been running for 4 days, or going to be about 4 days. And so I look at that and say, might need a little bit of a break, might need to take a little bit of a breather. I also say that because price has not even touched the 15-minute 50, and so that can be a bit of an issue. Also, we are coming into previous resistance, 30 ATR, hourly 200, all this kind of stuff that tells me it's probably likely that we're going to get, or at least I would like to see a pullback. And I think that we should be expecting some sort of pullback. Now, I don't know. I don't think it's going to be too major. I would think something around here to the hourly 50. That would be great. And we'll see if that actually gets us underneath the 15-minute 50. And then maybe we can kind of get a move back up like that. So big picture, if this thing really gets someplace, if the market really actually starts getting some traction and going someplace, I would imagine it's going to go beyond the daily 50. Now, it might get to the daily 50, pull back again, and then go, okay? But I think that over the course of days and weeks, that it will probably work its way past the daily 50. And, that's all well and good. And if it can do that, fine. Just understand that as much as we might be getting the market to start to move up like this, all of this up move is into resistance. And I'll show you a couple ways of looking at that. Number one, if we go up across a downtrending moving average, those are conflicting angles. You know, that is a counter trend trade, right? Because if price is going up against a downtrending moving average, they are not moving together. They are, one's moving down, one's moving up. That is not sustainable. At some point, that's going to come back down and need to keep kind of changing that direction of that moving average. The other thing to look at is that if price gets over the daily 50, the Moxie indicator is still way below zero. Way below. It's not even close. Okay. So remember, an inverse trampoline move is when price is over the 50, but the Moxie indicator is below zero. And look at the last one we had. Price over the 50, Moxie indicator below zero. Big inverse trampoline move, and look at the move that we had after that. The other thing I'm looking at, if we come over here to the weekly chart, let me look at this. And I figure that if price gets over the daily 50, that's going to be sending price to probably the weekly 21. And then 21 EMA on whatever time frame it is that we're studying tends to be resistance. It's not exactly, you know, sometimes it's exact, but sometimes it goes a little further, sometimes it's shallow. But generally speaking, the 21 EMA is resistance, at least in a downtrend, support if you're in an uptrend, like that. And so I'd be looking at this and saying, hey, we're probably going to see price come up here, and I'd be watching out for price to start running into the underside of that weekly 21. And if it does, probably some chop. And then I'd be expecting price to at least come back down and retest the low area, and it might go further. So just understand that if you're going to be trading this to the long side, that's all well and good, and it could last a while, and it could go a fair amount, but it is, generally speaking, up into resistance. So then we come over here. Let me actually do this one. If we look at the UVXY, I find this is I'm very interested to see how this all pans out. And so we're kind of watching this one day at a time. Remember, oops, what's going on there? Pushing some wrong buttons. There we go. So remember, we've got this lower trend line that has been holding pretty well. You know, it's been holding the last 3 times, and now we're kind of coming down here to the 4th time. So I'm real curious to see what that means as far as a bounce. And we saw that the market today kept going higher. Notice that we have a small double bottom on the UVXY. So either traders are preparing and hedging against the job numbers and whatever to do with that, or there is something actually a little bit more major, and from technical standpoints, the market is likely to pull back. So there's a bit of a divergence there. UVXY did not go lower, while the S&P did go higher. All right, you know, we can talk about the NASDAQ, and it's, it's kind of doing the same thing as the S&P as far as structure goes. The one thing to maybe kind of note is that the NASDAQ is actually leading the S&P. And I think part of that is due to all the tech names have just been pummeled. I mean, we know that originally it was the NASDAQ and tech names that have really gotten hit. And so while it was the weakest place, so the NASDAQ was weaker than the S&P, well, the fact that they've all kind of been beaten up so much are kind of some of the first to rally when they actually start going up. And because maybe they're also the most shorted, so we're going to be getting the most short covering rallies coming out from them. And so I think that is part of why we're seeing them move up like this. Do keep in mind, as I said with the S&P, about the daily 50. So with the NASDAQ, the daily 50 might prove to be some resistance in the near term. And so I wouldn't be surprised to kind of see some chop in here before maybe going higher. So that's the NASDAQ. And if we look at the IWM, IWM is also a place that has just been beaten up so much, and they have some of those high short interest stocks and some really volatile stuff, and so wouldn't be surprised to see this thing kind of take off at some point too if short covering rallies and kind of these oversold moves off the low start to pop up. So that's why I'm looking at something like this, and we had a trampoline move right there. The IWM actually did a really nice job of holding the 15-minute 50 there with the Moxie indicator above zero, but this seems like too good of a move. It was a nice move, but probably too good. And I see some resistance in through here, and I want to see if price can kind of come down and find some support, and that'll help give us the setups that I like. All right, then if we look at some examples out there, Apple, looking at the higher stocks, the bigger stocks, and we come in through here, and while they've had the setup I'm looking for, like with the hourly trampoline move, so price below the 50, while the Moxie indicator is above 0 is a trampoline move, typically bullish. I didn't quite get out what I was looking for on the 15. It just kind of took off. And we had a lot of, it was holiday weekend. It was kind of some news out there in the FOMC and, you know, yada, yada, yada. The only thing I could have pulled out here was that quick little tap of the 15-minute 50. Because remember, I like to see price engage with moving averages. A quick little tap, and that sent price up there. But at this point, I'm a little bit nervous on the long side because of this gap between price and the 15-minute 50. At some point, that bird is going to come home to roost, okay? Because that is an issue. That means it's too good of a move, and it is pulling away from support and building a big air pocket that is going to basically weigh on price. And when it does finally stop moving up, it's got a lot of air below it to come back down. So that's why I'm kind of looking for a pullback. And then if we kind of look at Microsoft, again, they're all kind of looking the same. You can see that trampoline move right there on the hourly chart right there. And then, just a tough setup here. We had kind of a here, up, down, and then up like that. The Moxie indicator, well, it wasn't looking terrible, wasn't looking awesome. And so I'm a little surprised to see how big these moves were. I think it's mostly a short covering rally. And so short squeeze and all that. And so I am interested to see what happens when these things start to break back down. You can see here, again, that price has not touched the 15-minute 50, so I would imagine it's in the process of moving down. And interesting to see that something like Microsoft double top compared to, say, Apple or Tesla and whatever, making newer highs on this newest leg up. And if we look at Tesla, and through here, it's been just a jumbled mess. And so this is, trying to find, or down low for me, the kind of trades to get something like this. It's just not quite my wheelhouse. I kind of need to wait until we get a little bit more robust or a little bit more of a trend, because trying, back in the day, trying to figure out this and down is challenging, because we get a lot of ups and then downs and around and all this kind of stuff, and it's very messy. And so when we do finally get a move like this, you might be kicking yourself like, how did I miss that? Like, well, there were some clues, but at the same time, I'm being very cautious in through here on the long side, because we are in an unstable market, and we could, as we've been seeing, get a move up, and we could just as easily get a move down the next couple days. So, move up, down, okay, up and then down, and then up and then down, just all over the place. So yes, there are some that are trending better than others. That is always difficult to know which ones are going to do it compared to others that are just going to be messy until you kind of get there. Now, in hindsight, they become obvious, because you could say, oh, well, look at that. That one really held the 15-minute 50 well. Okay, but, what if it didn't? And what if it came up and then this? That's my problem with these things. So, like, Tesla is looking all right, but say TW, how's that? How's that for something to trade? Quite challenging. So with Tesla and all some of the other ones, you could say, right here, like, why didn't it go up? Well, it went down. And you could say, well, as long as it follows the 15-minute 50, true, right there. But you gotta really be active on these things. If you kind of get in here and then it goes down, you got to get out, but then it comes down and right back up. And that is the challenge that I'm seeing with these kind of things. Now, that being said, if we can try to figure out something through the noise, what I am seeing in here is that we do have TW getting past the daily 50, and now it looks like it's pulled back and trying to sit on the daily 50. So that looks very interesting. Okay, the 8 is over the 21. That looks good. And then, as much as this is kind of convoluted and confusing in here on the hourly chart, there is a possibility that we're getting a double bottom. You can see that double bottom on the 15, and we have positive divergence. I also wouldn't be too surprised that we went from a wide Moxie indicator, so meaning weak, to a tight Moxie indicator, meaning strong. So I think TW might be an interesting one to look for, primarily because of this daily situation. All right, then if we kind of flip back to, say, ARK, this is a little bit, another view basically of the IWM small caps and see what's going on. And obviously very choppy. And yes, this was a good move. So was this. But, last time we traded this, or last time we were watching this, you can see here price went up and followed the 15-minute 50, did pretty well. When did it quit? right there when it broke down below the 15-minute 50, and now it's doing it again. So if we look at the hourly chart, I'm seeing a lot of stocks do this kind of thing to where they are running the 15-minute time frame pretty well, and they're putting in a gap between price and the hourly 50. And that's why I'm saying at some point, I'd like to see this thing come back down and actually test the hourly 50 for support. So you can see here, bit of a gap, bit of a distance between price and the hourly 50. So I'd like to see if it can pull back and engage with the moving average as opposed to pulling back and failing that moving average. So, you know, with at least how I trade and looking at stocks, it's usually, okay, I'm looking for something and I need it to confirm. As long as it confirms with price, you know, following these moving averages, that's great. But when it doesn't, then that's when you need to get out. And so it's kind of those things that you try your best hand, and you just have to understand that when it doesn't work, then you get out. And as long as it does work, then you can stay in. And sometimes you don't know exactly which ones those are going to be until it actually happens. Zoom. This is another one that is a little bit challenging for me. You know, something in through here, like, yes, okay, it's fine. It's been moving up. But what you can see is, yeah, finally got over the daily 50. There's the first move. And then the second move is into the 50. Third move is into the 50. And I was trying to trade something like this. I don't know about you, but man, it's challenging for me to figure out, okay, where do you want to go? Because so far in through here, it hasn't really, you know, done anything on the hourly chart that I like. And same thing here, hasn't quite done anything yet. And then here it failed through it. And ultimately, I don't know, depending on where you got it, if you got it in through here, it's been up, it's been down, it's up and down, and now it's up mildly. And that is a lot of headache. That is a lot of headache to, if you bought here and you're here now, that is a lot of headache for not much gain. And so I look at some of these things and it just makes me a little bit reluctant to step in on some of them. All right, then Blink. More examples that I wanted to show you of things that, while they had a pretty good move over the last couple days, very, very challenging to actually trade them. You know, we would have basically had to just say, I think this is going to work. And right there, price basically pulled back and flagged into the 15-minute 50 and took off. Great. But you know what? Look at all the other times. And you look at this and you're kind of in a top, you know, there's some resistance up through there. And we're still dealing with a downtrending daily 50. So, you know, while these things have moved, and that's good, that's great, I am looking for kind of the better setup that I can find. And for me, that would be a pullback like that into the hourly 50. And that's what I'm kind of looking for across the board, are pullbacks into some moving average support that I can actually work with a little bit better. But boy, trying to figure out when Blink is going to actually work, it's been pretty tough. Plug, kind of along that aisle. I had a lot of people asking me and talking to me about this today when I was in the chat room over at Simpler Trading. And, you know, we can see, hey, it did finally get past the daily 50. So great, finally did. There was a trampoline move right there, but the 15 is a little convoluted. You know, 50, 200, 50 with that big move down. And it finally go over the 15-minute 50, double bottom, positive divergence, that kind of stuff. Sure, a nice move up, okay? It's hard to know which one of these things are actually going to move. Some of these are a little bit cleaner than others, and then, you know, we'll just have to see how far they're going to go, because again, I'm kind of seeing these things coming into some resistance, and with the market having run already for a few days, I wouldn't be surprised to see these things pull back again, because I don't think that while they might continue to move up, I don't think it's going to be the easiest thing or the cleanest thing. So you're kind of just going to have to try and buy those lows and those dips and do the best you can to figure out which ones are going to keep moving up. TAN, solar, you know, this one keeps getting talked about. And while it had a nice up day, there are some solars that had nice up days, it's still getting just wedged between here and the daily 50 and the daily 200. Now, it does seem promising that if the daily 50 can continue to hold right there, that we could make some progress past the daily 200. But it's a little sketch that the daily 200 is still in a downtrend and the daily 50 is below the 200. So just remember that we are not marrying these things, and we are not prepared for these things to really be long-term trades or plays. These are more like moves. You're going to move and you're probably going to pull back, and then you're going to move and you're probably going to pull back. So, you know, it seems like it's coiling up. Maybe it's going to do something. Today it just kind of popped. You know, I think the best thing I could say here was that it popped from the 15-minute 50, but there was nothing I could do here on the hourly chart. There just wasn't. There wasn't a good setup for me. And so a lot of these things are just challenging with the way that they're moving. Maybe some other ones. Path. Kind of look at this. Oops, let me kind of move that over. And you can see, again, trying to make some progress. You know, it's doing fairly well. And if we look here, it's been trying to hold the daily 50, and if it can keep doing that, then great. I don't know where it'll go, but you know, maybe up here or something like that. And you know, trying to find the exact moment to get in here has been tough. You know, up, down, up, down. Unless you can really be good at buying some lows like this, then it's been tough. And then you get into a nice move, comes back down. Nice move, comes back down. Nice move. You know, do we keep going to the upside, or do we pull back a little bit and engage with the higher time frame moving averages? And then one more, Roblox, you know, had another couple of days, good moves, but you know, over the daily 50. But what if it does what Path does? What if it's up here, then down here, then up here, then down here before it finally gets going? It's just going to be really tough. This is, even though things might continue to move higher, it's not going to be easy, at least the way I see things, because of how much they're going to keep moving up and down, up and down, up and down. We're still in a bear market, and that's why this is challenging. So, you know, find what works for you. And if it doesn't, just practice, stay in cash, and just, you know, you don't have to trade everything. That's kind of what I've been looking at, is even though I see a lot of things and I can help guide and educate for a lot of things, I'm not doing a whole lot of trading. It's just challenging. All right, everyone. Well, thanks again for tuning in, and I hope you're having a good week so far. And we'll see you next week. Thanks again.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.